Hi, good evening. Today is Friday, June 11th. It was an interesting week, and it seems like every week we have something that Trump was saying was true over a year ago or before election, and it was denied vehemently by the MSM and various officials, only to be proven true eventually. For example, last couple of weeks, it was a China leak story, lab leak story. This week, it was the use of tear gas in Washington to clear the crowd that he was vindicated yet again. And another issue this week was that more and more news to be coming out about Hunter and the Ukrainian energy company Burisma. And now there are two Democratic lobbyists under investigation connected to that whole scandal. The founder of Burisma has been known to be a corrupt oligarch for many, many years. Definitely in Russia and in America, he was under investigation, multiple investigations in Ukraine. But that obviously didn't stop Hunter from having dealings with him and being on his board. Oh, I can understand some of his smoking habits are very expensive, I guess. But Joe not only knew, but participated in these dealings and attended some meetings. And Trump was pointing this out before the election, but of course, all of that was ignored. And I think it's odds are that if all of those issues came out before the election, including that the vaccine worked, that was delayed, it's odds are that Trump would have won. But here we are now. And as Vic likes to say, the markets are very woke, endless woke news coming. And so the markets like it. And we finally made yesterday, we finally made new all-time highs on S&P 500 at the sogi level, which Victor likes to call it, the 50 level. We finally traded at 42.50, 1 point shy. And this morning, we tested the level again, sold off again. And at the end of the day, we closed pretty much right at that level after a quick 10-point rally at the end of the day. So the market has been up for 3 weeks, and we have made new all-time highs for 8 straight months on S&P 500. And that indicates very strong bull market. So things are likely to continue going forward, and your volatility trigger, I guess, it's the market is above it, right? And
right, exactly. So well above it, right? This right around this 42.15 level, right a little above it, was that volatility trigger level. That above that, we would expect to see a grind higher, and we did see a really nice move higher over the last few days once it broke that level, and it ended up just above a level where there's some large option positions that that traders would be expected to adjust their positions and hedge, and so we saw it pause right there at the end of the day. Or I would say finish right there at the end of the day, go up to that level and finish there to sort of neutralize some of these positions.
Right. So I wouldn't be surprised if we continue slowly grinding higher and maybe have a little sharp pullback before the FOMC just to shake some weak hands. But FOMC is what everybody, I guess, is expecting, and to see what the Fed is thinking and planning, because the inflation data came in Thursday. That's when we made new all-time highs. The inflation data came in and it was quite high, but the market obviously shrugged it off as just temporary, transient. And so we'll see what the Fed expects to do. But Nasdaq is also only half of a percentage point or 70 points away from all-time highs. So it seems like it's very likely to get there early next week, and then just wait for a FOMC, and we'll see what that brings.
They might feel some, what I think the market is expecting is that they'll feel some pressure from inflation and make some sort of sort of hawkish statement. But if they don't, then that could be interpreted a number of different ways by the market, right? It could be interpreted either bullishly, like get out of cash into stocks no matter what, or very bearishly, because eventually it would really smack companies to have continued commodity inflation and wage inflation. So.
Right. And we talked about bonds last few times, that bonds were breaking out. And despite the really bad inflation numbers, it seems that the bonds continue their breakout and the yields are dropping. And so far, the shorts are being squeezed, and it seems to me at least that there is a little more room to go for the bonds.
Mm-hmm.
But again, FOMC on Wednesday is on the meme front. The GME stock has crashed about 40% on Thursday after the CEO was ousted. So that has been interesting because, again, we talked about all of the meme stocks and how they're running like crazy. And there is no really reason for it to be so high. So on the bad news, stocks like this, it's dangerous because they could just crater unexpectedly. 40%.
AMC also something similar, right?
Right. AMC is another one that, but AMC dropped a little bit, but I still think it's not over.
One of the things that I watch, so I think that important indicators is cyclical stocks, and as well as some of the biotechs, as from an entirely different perspective, just from my own background, I'm interested. But it's interesting to see the continued rally in the cyclical stocks like U.S. Steel. Alcoa hasn't been doing quite as well, but some of these actually it's a little better to look at it on a daily basis, that some of these have been pulling back. It's a little bit more divergence, but one like a U.S. Steel that's really dependent on like trade, more so than some of the others. It's really been rallying pretty sharply.
Right.
Energy stocks, of course, are, well, another one that I think is interesting to watch, especially as we go into FOMC, is emerging markets, because they'll respond pretty strongly either way in regard to whatever FOMC kind of statement comes out. But the biotechs also moving really strongly following the Biogen announcement. I think it's a sense that maybe the FDA will have to take a more accommodative stance toward biotech firms. And so you've seen some breakouts in some of these gene therapy stocks, like a CRISPR, Bluebird, which really a broken stock, but it's starting to break out again. Some of the diagnostic stocks like Illumina or Bruker, they're just really moving really sharply. And so I think it's worth watching, and maybe a lower risk play would be something like an IBD, which is the iShares Nasdaq Biotechnology ETF. It's a little better way to play it than trying to go into a specific stock where you can get better returns, but you have the risk, you have the company risk, and the risk of blowing up due to some kind of bad data. But still, the ones that I'm liking here are like a BioMRN or a CRISPR or NTLA, or some of the diagnostic stocks like Illumina or Bruker. Both will perform really well in this kind of environment.
Right. And what's the story with Biogen? That I've seen 3 people from the FDA advisory panel have resigned. over the disagreement of the approval of this drug. And so today the stock seemed to sell off. Is that something to be concerned about, or?
Well, it's just like what is the FDA's role? And so that's what they're really resigning over. What's the FDA's role? So the uh, so let's say that if the FDA is a paternalistic organization that's to decide better than doctors and patients what they want to take for something like Alzheimer's, which it's a terminal disease and there's nothing to treat it really. There are drugs to mitigate symptoms for a short time, but they don't alter the course of the disease. The but but the but so the question is whether the FDA applies the precautionary principle or a proactionary principle. And so a more freedom-minded person would say proactionary person. We need to be proactive in coming up with new drugs, making them available to patients, as long as there's not a major safety concern with this. Why not approve it? And the reasoning that the FDA gave in approving aducanumab is what's called unmet need, and that's a very specific phrase that's used very commonly in health economics and in pharma, where it just means that there's not adequate treatments in that market and or for that disease state. And that's definitely the case for Alzheimer's, where over the past 20 years, there have been so many drug developments that have failed and nothing's really come to market in 20 years. So the FDA is approved it on the basis of unmet need. These two panel members resigned because they were strongly against approving it because of, well, it doesn't add anything or the data is not good enough. Whereas what is likely the case is that this probably will work. It just won't work for every patient. And because there's no way to differentiate or know in advance who it's going to work for and who it doesn't, the study wasn't designed that way. Though when doctors actually use it with patients that are in that want to be more aggressive in their treatment, then they'll find that it'll work with certain patient types and not with others. And there will be more studies and more research and so on. But having something on the market will at least give patients that option if they want to be aggressive. So I think it's kind of a vision, like, what's the vision? Is the FDA this parent, paternalistic organization that in our interest decides what we should be able to try when we have a terminal disease? These are the same sort of people that oppose right to try and other initiatives like bringing COVID vaccine to market under the emergency use declaration. So right. It's like, is the FDA in this protective role, or is it in a role where it's really there to be a clearinghouse for information and help doctors and patients decide for themselves? So that's kind of I'm very much in favor of the FDA approving this, but I'd say there is a philosophy behind the people that have resigned, and it's not necessarily aligned with what the families of an Alzheimer's patient would be interested in, who want their relative to be healthy and with it as long as possible. So it's
do you know this drug is covered by the Medicare rather?
It likely will, because that's what it's not okay. So Medicare will be the main one. Like Medicaid, it'll be down to the state by state.
I meant Medicare, right?
A formulary, right? but Medicare will be the big one. And that like part, if this is administered in an office, then it could be covered under, say, Part B, Medicare. But probably what will need to happen in order for Medicare to cover it, and then if it's outside of an office, then it'll be Part D, and that's a different thing. That's private payers generally who have their own formularies. In either case, probably Medicare or the private payers under Part D will want some sort of evidence that everything else has been tried, and that we're not just going to go to this expensive therapy the first, at the first sign of, something, that the doctors have cleared some hurdle for the diagnostics, and that the patient fully agrees, and on and on and on. So there will be a lot of conditions to it getting used. I don't know exactly what that'll look like, but that'll be a negotiation between Medicare and Biogen and FDA and so on. But don't, Medicare is very sensitive to the cost of new therapies, and they'll try to not cover it except in the right circumstances.
Right. And speaking of vaccines, have you heard there have been latest issues with heart inflammation, I think, in young adults?
Oh, right. Mm-hmm.
Because of the vaccines. And so CDC is meeting next Friday to discuss this, which I would expect them to maybe hurry up and meet a little earlier to see if it's a problem or not.
Right.
Maybe work over the weekend. But joking aside, it seems like it's a serious issue for some children. So I'm not sure if that's a real issue, but then how do you make up heart inflammation in children? That's hard to attribute to something else. I don't know. Is that going to be a problem for pharmaceuticals?
No, well, there's adverse event data that gets collected, and that's required on the part of doctors, hospitals, pharmacies. All these institutions are supposed to collect it. Although there are people that call it into question, like whether it's really adequately being reported. Well, it's better than anything that existed before. It's pretty comprehensive, and so they'll go on things like that. But the question is, for any, like, the CDC is in the role of recommending vaccination policy for pretty much all institutions in the country, and even they have to apply some kind of risk benefit trade-off, and that's what it comes down to. Is like, okay, if there's more risks than benefits for someone who's 12 years old getting this vaccination, does it make sense? And for that to be the official recommendation, that if you go into an emergency room for whatever, sprained ankle or something, that they automatically give you your COVID vaccine, or you can opt out, but they're going to give it to you if you don't opt out. So things like that they is that recommended by the CDC, in which case schools might pick it up, like every student has to be vaccinated to come back. It's the CDC's recommendation, or not. So it's kind of there's not is there evidence of this is a real problem among younger people? It's not clear to me that the data shows that, but then schools have been closed for the last year pretty much, or a lot of them have. Students have been going back to school, I guess, over the past 6 months. But so it's just, here's the that's the question. It's a trade-off between risk and benefit.
Let's get to the crypto market. There has been lots of news in the crypto for the last couple of days. Well, obviously, we talked about El Salvador, that the president El Presidente brought that bill to the floor. And obviously, that's been considered as good news for Bitcoin moving forward. But I've read the bill, and it seems like it's really not that, it's not, from my perspective, going to make that much difference, because it's USD will be used as a reference currency and based on the exchange rate established on the market. So even though every economic agent, as they call it, must accept Bitcoin, it's still going to be fluctuating freely on the exchange. So it's just basically, to me, is a technicality. Although El Salvador is trying to provide some sort of trust to help facilitate this conversion from Bitcoin to USD and back. And it makes everybody, it forces everybody to accept Bitcoin if they have access to technology. So I'm guessing small businesses and small mom and pop shops who don't have access to technology are excluded from this. And so obligations could be maybe paid in Bitcoin. They don't make people accept Bitcoin across the board. And so the state is going to help provide that transition from conversion from Bitcoin to make it quick, instantaneous. And so we'll see how that develops.
Right, it's I think it was overall good news for Bitcoin. It does show some acceptance that didn't exist before. I think that the other thing is that it brings some legitimacy to it. That is not just this currency for money laundering or whatever people say, where it's such a minor part of Bitcoin compared to what it is for the US dollar, for example. Our $100 bills or $500 €500 notes, for example. But it's still something that people that are opposed to Bitcoin, opposed to cryptocurrency say. But it does add that legitimacy. I think what it also will do is there's long been a view that and I'm not sure that Bitcoin might be not quite in this position as it was several years ago, but was a view at one point that where cryptocurrency would be really valuable in developing countries as a means of making micropayments that wouldn't be easily made in US dollars or some other currency. And I think that's still true to some degree. It just depends on how that's set up and what the fees are and so on. But so some of these things I think are it's good news. I think it might have contributed to this bounce. So Bitcoin, when we were talking last on Monday, Bitcoin was breaking down below this support level, which this was the support level that I've been watching, where it seemed to stop there from its cascade down in April and May, and it bounced above that level pretty nicely. Went down to about 31,000, and bounced, and now it's at just over 37,000. That's a better place to be than it was. It's not. I would say it's not bullish yet. What we see here is that you can see it's roughly a set of lower highs here, which I mean, that's in my view at the most basic level it's bearish. But if it can bounce back up to the low 40s, then that'll be a much more neutral position. And I expect to see some attempt at a bounce. It did bounce a little bit over 38,000 yesterday, but has pulled back since then. And I think there's going to be a lot more chop. So it's not going to move straight up from here, what we saw back in March. But I think it's overall a little bit better than it was. Now, like Ethereum, not looking so good right now, but I actually think that the nature of crypto is that Ethereum will underperform Well, if Bitcoin is going to get its legs and rally a little bit here, it's going to be, it'll drag Ethereum with it, but Ethereum won't be the leader as it's been over the last few months. And so we see that this is the Ethereum Bitcoin ratio that it bottomed out here in April, or was or made let's say a bottom here in April, and then bounced really nicely from here, from that level up to a little bit over 0.08 on the ratio. And since then, it's just chopped around, and I expect it to chop around some more, and maybe even Ethereum to go back to the 0.06 level. And I think that would be a decent corrective move. And so I would expect to see that over the next few weeks. So Bitcoin, if Bitcoin can rally from here, then Ethereum is going to lag, and so are some of the rest of these. So, and I think some of the smarter traders, if they are the ones flipping back and forth, there may be a little bit more Bitcoin heavy right now on those trading positions than they are Ethereum heavy, whereas they were, and that's why we're seeing some of this deeper sell-off in Ethereum and Bitcoin is money moving back into Bitcoin. It'll move back to Ethereum, once that rally sort of peters out. But I think in the near term, we could expect to see a little bit more kind of laggard behavior in Ethereum, as well as in some of the other big ones like Cardano and Polkadot and so on. Some of these, they're just going to underperform Bitcoin.
Also interesting, just a slight thing, that in El Salvador, they're planning to mine Bitcoin with volcano energy.
Geothermal energy, right?
Right, geothermal energy. But volcano sounds a lot more fun than geothermal. So I'm not sure actually how viable it is. I don't know anything about it. Do you think this is something that is viable energy and sustained, or?
Well, what it's really about, okay, it's pretty smart, because they do have a lot of geothermal energy there because of there's a lot of volcanic activity there, it's an attempt to change the narrative a little, because there's this some I don't want to say it's some of the bearishness, but I think it was deliberate FUD against crypto to raise the issue of energy consumption, as if but here's the thing, that and there are even people that criticize this announcement by El Salvador that we're going to use geothermal energy for this, because they said, well, but the energy could be used for something else. But wait a second, if in a country like El Salvador that can't print money to oblivion, they actually have to pay their bills, right? They have to pay their debts in current income. So if Bitcoin justifies building a geothermal plant that then is used to mine Bitcoin for whatever, 3 years, 5 years, and they're able to pay it off in a short time, then they've gotten a new power plant, and they can use it for whatever they want, right? I mean, they paid it off, but they're not in a situation like the United States where they can just print money. They're using the US dollar as their currency, and they don't control how that currency is issued. So they have to pay their bills, and Bitcoin is a way to pay for infrastructure and like a new power plant or a new power plant. So I see it as a good thing, and it's also clean, renewable power, right? The only thing is water vapor in the atmosphere, but that comes back down as rain. So but the fact is that a lot of, except in China, where they were using these coal plants, and that's changing a little bit. Like in the United States, most of the Bitcoin mining is done in the Pacific Northwest, where it's hydropower or something else, or geothermal. And so that's why it's so cheap, is because they're not burning coal, they're not burning oil or whatever. So it's so I think it's that announcement was an attempt to shift the narrative a little bit about.
Right. And also the good news about Bitcoin was that I think a day or 2 days after Trump was bashing it on I think Fox, Michael Saylor was on Hannity actually praising it, which is surprising because Hannity has been a long time supporter of Trump,
Right.
very strong supporter. So he has invited Michael Saylor to present his point of view. And I think that's actually very bullish for Bitcoin, because most of the people were not really familiar or even thinking about it. And now Hannity has a very large viewership. So now a whole bunch of new people are made aware of Bitcoin, and they have this association between Bitcoin and digital gold. So that also may help Bitcoin over Ethereum, at least, or just in general, because now there's more people who are interested in perhaps participating in Bitcoin promises of the.
I see Bitcoin as a gateway drug to Ethereum myself, but
Right.
in a sense, I mean, I see them as being complementary, not as competitive. And but I think that usually my first entry to crypto, any kind of crypto, was Bitcoin. And when you learn about it and you learn about some of these other things, then eventually you try it, and either people get value out of it or they don't. But
Well, actually, Hannity asked Michael Saylor why Bitcoin should be preferred over other digital assets like Ethereum. He said that Bitcoin is the oldest, strongest, better performing asset, and it's easy to keep track of 21 million coins in cyberspace. Its durability, security, and integrity makes it a top choice.
well, I just think that the use case is different. It's not
Right, but he's obviously biased because he holds a lot of Bitcoin. So
right. It's I would just say that Ethereum, Bitcoin is a store of value. That's its use case. That's a selling point for it.
right.
And or that it's a hedge against monetary inflation, monetary mismanagement. In the end, in my view, inflation is more or less about a monetary policy and more about a breakdown of trust, that people are distrusting the government to manage money effectively. In Bitcoin, there's no government managing it. It's being managed by the code. But Ethereum has a different use case. It's that it's a platform to build apps on. And that's not the strength of Bitcoin. But that's not to say there are no apps. It's just it's not the strength of it compared to Ethereum that's designed for that purpose. But I think that there are cycles in this market, and what we're seeing right now is well, I certainly hope, or at least I think that there's evidence that we're at the end of this reaccumulation cycle. And there are certain statistics that show that Bitcoin is actually very, based on on-chain data, Bitcoin is actually at a place where historically it's been a good place to buy. And so something like the what's called the market value to realized value ratio, where this shows roughly it's kind of in a sense the what the is there a fundamental basis for, or what's the ratio of the current market value to what the realized value, realized capitalization at which the acquired price of the currency. And so right now that's at a ratio of about 2. Historically, as you see, this is over right now, like a 3-year period. But if you can go back actually the very beginning of Bitcoin, and you see that this is not at an extreme level based on historical averages. And these big spikes were bull markets. We had a modest spike here, but it wasn't anything like what existed in the past. And then something like what's called the net unrealized profit and loss. It shows what percent of the or what the profit and loss position, average profit and loss position of all traders is. And right now, when that gets really high, then that signals a kind of euphoria. But
Right.
we're at a level that's pretty neutral right now, and or much more neutral than it was. And the same is true for Ethereum, maybe a little bit less, and it may be still in a slightly more highly valued than Bitcoin, but it's also there's some different dynamics for Ethereum than Bitcoin, but it's that again, it's at a place where it's been historically, it's more at an average level across its life. And if you look at something like maybe one that is interesting for Bitcoin, is what's called the stablecoin supply ratio, which is on exchanges, what percent of the or what's the ratio of Bitcoin on exchanges to stablecoins divided by stablecoin positions on exchanges. And this is now at an all-time low. So it's saying that there's some really big stablecoin positions that have been built up. So there's a lot of buying power.
Well, another good news was that we didn't even talk about the Basel committee that now kind of officially allows bank to hold Bitcoin. But they do have high capital requirements for holding crypto, but it's still kind of like official okay for the banks to hold crypto. They put it into the highest risk category where you still have to kind of hold 1-for-1 ratio, but I think it's positive. What do you think?
Right, and there's a bill right now in Texas to allow banks to while they're effectively allowing there to be crypto banks, and this is or like crypto deposits in regular banks, and this was already done in Wyoming some time back, but Texas would be the second state to do this, and so that's a positive thing. It's like there's a big technology industry in Texas, obviously, and they want to attract businesses that do business in crypto or to develop for crypto, and that's what Wyoming's doing. But it's a little bit of a maybe a harder sell to move a company to Cheyenne than it is to Austin, Texas, where there's a big supply of programmers and technology companies and so on. But I think the just looking at either on-chain data, I think there's evidence that we're at a place where, and there's a lot of bearishness still. We're at a place where it's more likely, I think a rally is likely here, but it's not going to be straight up from here. I don't think we're going to just see a replay of January through April. It'll be a much choppier move up, and it could take. I mean, if it does make new highs, it could take. It's going to take months, not weeks, to get there. And but that's just the way that the markets are. That it's going to have to knock out a lot of the fluff. We've had a lot of the fluff knocked out, but there's more fluff to knock out still. But I do think that in the midst of all this, it's really interesting to see there are some coins that are really getting killed in the DeFi space, like something like the synthetics or Uniswap. There may be some good values in there. I would say I'd wait for there to be a convincing rally. Ethereum right now, which is where a lot of these are based, is a little weak, and I want to see strength before I start taking some trading positions in either Ethereum or in some of these DeFi coins. But that's where we could see some strong rallies if we really do see a rebound in crypto.
Right. Well, thank you very much. Very interesting week, and we'll see you all back on Monday. Thanks for watching.
Good weekend.